Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 25th of May. Now, just coming out of that North American session, just having a look where the majors are. We've got the Aussie dollar still trading sideways, but just pushing up towards resistance around 75.85. Kiwi, pretty much the same. These two currencies have been pretty inactive, and it's just tweaking around that 69.35 resistance as well. So I don't know if we're going to get much activity here, but this is where we'll bring the economic data. It should tell us what's going on. Now, dollar yen still edging lower. Seems like every sort of 12 hours, Trump comes out with some sort of tweet saying he's going to blow up North Korea. So dollar yen, or the yen safe haven trade, is back in play. Euro still sort of just tweaking to the downside. I'm still waiting to sell up here. I was a little bit disappointed, didn't get a little bit high to get my short position in play. Sterling, we did have the really strong retail sales figures yesterday. We saw a test 134.20. Just goes to show how solid that trend line is. It's just been tracking it lower for the rest of the UK and North American sessions. Now, dollar CAD, oil starting to slowly drift lower. It's off about $1. You can see oil there on the green bars. That should put upward pressure on dollar CAD, but we'll see how that sort of turns out. If anything, it's still trading sideways in a pretty big range. So we've got these movements in the major currencies now. That's all sort of well and good, but what we have to do is really bring it back and equate what's going on to the general news in the market. So if I just change over the screens here, this is where you can really piece together those movements in the actual majors themselves. All right, so just coming back to looking at the major news here, dollar weakens as Trump nixes North Korean summit. It's debatable over these two lunatics here, Donald and Kim Jong-un, who actually has cancelled the summit, but all of a sudden they've gone from being best friends to at each other's throat, and Donald's saying he's going to use the force of the military, all this sort of stuff. Okay, so just watch that. That's going to be a situation where we are going to have to wait and see how that plays out. But I would expect the more Trump talks about it, the way he handled the situation previously, the more he talks about potential warfare, the more I think it's closer to the end, and we may see the yen come off, which is dollar yen rallying again. Sterling, well, we did see that big correction in retail sales, but Brexit is now poking its head up, putting a little bit of downward pressure on sterling as well. And as I mentioned there before, oil falling, it's going to put some downward pressure on the CAD, or upward pressure on dollar CAD. Basically, there hasn't been a huge amount of new news out there, right? So what the new media outlets sort of can do is actually start to bring in a bit of hype around that. If anything, you really should be looking at the economic numbers and seeing what was coming out here. Existing home sales numbers really much weaker than expected. So that's something to sort of look at there. Obviously, the retail sales figures bounced in the UK. But coming forward, now, once again, now piecing the market back together, what are we looking at today? Well, we do have Japanese CPI data. Now, the Tokyo CPI numbers are the key CPI figures for Japan. Now, they are high impacting because it's a CPI number, but you're really looking for extreme levels of activity to get dollar yen moving on these CPI numbers. The fact that with the yen and the North Korean summit and the yen safe haven trade in play, this really comes into play here. If we get really weak numbers, or weaker than expected, then that could put downward pressure on the Nikkei and should put downward pressure on dollar yen. So make sure you have a look at that. Otherwise, I generally wouldn't be looking at it, but it does come into play because dollar yen has a heartbeat at the moment. Then coming through the European session, the IFO business numbers. Now, historically, these are usually pretty solid numbers. They have been, well, they're not really rated at this point, but just have a look at those. Once again, we have seen the German numbers really impacting the euro. So there's a chance for these numbers here to impact, even though they don't have like a subscribed rating there. The UK session, well, this is going to be, once again, the focus has been all week UK data. This is the second release. Now, it is a high impacting number because it is the GDP number. The second release is usually closer to the money because they have more time to collect the data. So the thing is, I don't expect any major variations here on this data, but because it's usually close to the money, if there is variance, it will impact. That's the way it works. So most of the market doesn't expect anything, but if it does, well, then that's even a bigger sign because this data is usually pretty close to the money. And then coming into that North American session, now we've got two things to look out for. We've got Trump and his geopolitical bandwagon, but durable goods, a big historical number. We're expecting a big negative number for the US dollar. And then you've got the University of Michigan sentiment numbers there as well. So that's just to finish off the week. Now, I think if we just come back to the major currency pairs, just for a second, I'm just trying to get that cursor on. Now, what we have got here is to see the major pairs themselves as well. You know, the Aussie's just sitting up towards resistance, so is Kiwi, and we've also got sterling, right? They're sitting at precarious levels. Now, the US durable goods numbers is probably the key event here. Now, if we do come across here, let me just change screens once again. If we do come across here and just look at the US dollar, right, then you'll notice, so the dollar itself has started trading sideways, all right? So one of the things that we do want to look at here is we've got this sort of level here on the dollar index. Of course, the trend is still up, and you can see here on the daily charts where the dollar index is heading higher, but it is coming back down to a key point. What we are going to be looking at very closely are these US durable goods. If they come out really weak, well, then this level is going to come under pressure, and it's only like 20 points away. I would expect maybe a bit of a clean out on the downside, and that may be enough to push the sterling higher, Aussie and Kiwi higher. Dollar yen, I think it's going to have its own little game with regards the safe haven play. And just have a look here too. One thing of note, the US equity market down minus 0.3, so hardly moving. All right. So once again, the Nikkei scheduled to open up down 100, and that's where obviously, sorry, I should have mentioned that's the benchmark starting point for the Nikkei. So if these Japanese CPI numbers do come out variant and actually weaker, you should see the pressure on the downside of Nikkei, and that should put further downward pressure on dollar yen. If they come out stronger, well, then you wouldn't expect the Nikkei to sell off so much, and dollar yen should probably slowly edge higher. Although I do suspect most traders will wait for to hear about this blow up in the whole the Trump saga, Kim Jong-un. They love each other's hearing each other talk. So that's pretty much where we are today. So I think the Asian session, once again, dollar yen will be the main focus. Once we do get back into, if I just change screens over here, come across back to the majors, the dollar yen will be the major focus in the Asian session, of course. It is these events, these geopolitical events that Trump is putting together, they do start to lose a little bit of momentum as it drags on. But you can see at the moment, it's sort of been sporadic. It looks like it's going to have another shot here on the downside. If I just blow that chart up just for a second, you can have a look at the extent here. Once it gets down a little bit lower, there's not a huge amount that's going to stop it from really sliding a lot lower. So traders will be sort of pushing towards this. It's a pretty fickle, pretty weak support line. It does come from the low just to the recent lows, and that's not. So don't put all your money on that holding because it's pretty fickle. Really, that was the good support line that it broke down through 110 sort of 15. If anything, it's a sell on rallies. The market will be, if you are long, you'll be putting your stop below that support trend line, and that's probably the next sort of trigger event. But and that's why the good thing is we do have those Japanese CPI numbers. Usually wouldn't impact, but today they have a bit of a chance. Top side, Aussie, Kiwi, potentially. They are really going to take their direction from the US dollar. So I think waiting for those US numbers is probably the best and most directional trading opportunity of the day. All right, guys, that's a bit of a wrap from me. Have a good trading day, and we'll catch you in the trade zone. Cheerio.